Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for the ISE webinar series, where each and every week we bring on special guests and talk about their views of the ISE FX options product, whether they look at the market from a technical standpoint, fundamental standpoint, or if they're really just an options expert. So we look at it from a lot of different perspectives. Steve Misic is with us today. Steve Misic is a top-rated instructor for the Online Trading Academy. He's been trading for over 15 years. So Steve has a lot of experience. He's an instructor teaching futures, Forex, equities, options. Again, today he's going to be talking about predicting the U.S. dollar sentiment, strategies for any market conditions. So I want to welcome Steve Misic. Hey, Steve, how are you? Steve Meisinger here, your host.
Hi, Steve. Hi, everybody out there. Good afternoon. Pleasure being here. Really enjoy being here. Look forward to it. So this is
I'm glad you made it
this year. Thanks, Steve.
Why don't you take it away?
All right, super. So this is our first one this year. I've kind of done a series for everybody starting last year around this time. And we really caught a nice break. We kind of planned out a few good trades going forward here with the dollar. And we kind of had the stars line up for us, and the trades turned out to be pretty good. So what I basically want to do with our predicting U.S. dollar sentiment strategies for any market conditions segment today is kind of see where we are and talk about how to plan going forward. Okay. So again, we have to always show you a little bit of disclaimers here. Options do carry risk, of course. Make sure this is money that you can afford to trade with, okay? All right, and we are talking about the ISE FX options. Last year when we started, we had only 4 of them, but we've added 2, the Australian and the Swiss franc, and so now we have 6 that we're actually able to trade. Accessible through your options broker, so you don't need to open a separate Forex account. Exchange listed, cash settled, very important, European exercise style, and they can be traded as spreads. So they're a great product for somebody that like to trade Forex on a longer term basis, like Steve said a little while ago. That's absolutely what they're great for, okay, in addition to trading spot. So as I start off every one of these segments, I always begin by saying first thing you have to do is to combine fundamental analysis and technical analysis to become a complete trader. It's okay to want to do one or the other, but as somebody who traded, like Steve said, many years ago, traded during the bubble of 2000, watched my account get cut in half, and simple things like trend lines and moving averages would have kept me from losing a lot of money. So here at Online Trading Academy, we want to make sure that you understand that fundamental analysis is going to be great when everybody's bullish. It'll tell you what an asset's worth, and in the stock market, price earnings will expand, and people will be willing to pay higher and higher prices. But as soon as people get fearful, technical analysis will show you those emotions on a chart. So you want to put the two together to become a complete trader, okay? When it comes to predicting, first thing you need to do as a trader is to form an overall opinion. And that starts off by listening to news, reading in the paper, things that are being said about the dollar. A lot of these influences are going to be conflicting at first to your opinion. But as a trader, the key to the word trader is I'm somebody who's willing to be flexible, which means that the message I'm reading in the paper doesn't agree with what I'm seeing on the chart. I have to be willing to cut my trade off, and that means do not form a bias that you cannot get rid of. That's the worst thing in the world for somebody to do when you're trading anything. The process of actually what happens is you listen to the news, you read the paper, you read about money supply, maybe you hear a Fed announcement, you follow economic reports at different times, and you start to put all of these pieces of the puzzle together to form your thoughts and your perceptions, and that leads to your action, whether you're going to actually press the button to either buy or sell. Okay? So this is a process that we go through when we get ready to make our trading decisions. When you begin, first thing you want to do is review the websites that we like to look at. Like the ISE is a great place to get information on not only equity options but Forex options. It's one of the websites that I like to look at. I like to look at some headlines like Bloomberg News or some of the other financial websites that actually give you a global perspective. And then from there, I want to drill down and get specific as to what time these high-impact reports are going to be released. What time is the economic data going to affect me if I'm trading in the Pacific time zone like I'm doing this week? I'm actually in Seattle, so this evening we're actually going to have our overnight session so we can be a part of the London session. So we want to know when we're going to have data releases in the UK and in the Eurozone. So as seeing as how I'm just one person and a lot of times you can, get lost, it's a good idea to have some kind of a checklist next to you that you can record the times of the data releases, and at the same time you also want to have a trade journal next to you so you can record information about all the trades that you plan on taking. This is what goes into, again, to the planning process. So some of the recent headlines that everybody's been listening to and reading in the papers, the dollar steadies after a rally, U.S. bank aid supports the dollar. Notice I highlighted in red something that stands out right away. Players in the Forex markets believe that the U.S. government is taking very aggressive steps to tackle the bank problems. So everybody all over the world has problems, and on certain days the newspaper says, oh, the dollar's rallying because the government's taking steps to support the dollar. So of course we're also hearing probably the same thing in Japan because the Japanese yen is weakening rapidly, so there's probably some kind of currency intervention going on that we're not really reading about right now, but keep an eye on it. You also want to watch the euro because Jean-Claude Trichet is a very important influence on the Eurozone. And here we have a headline that says, traders say few are willing to chase the euro higher as the European Central Bank President Jean-Claude Trichet said on Monday the Eurozone financial system is under severe strain. So as a trader, you're taking these clues out of the paper, you're taking these little tidbits to try to formulate your opinion on what you think is going to happen next. Of course, if you go on to the Great Britain economy, you'll see that the British pound finished a week lower last week as comments by Bank of England Governor Mervyn King and the minutes from the central bank's last meetings added evidence that another rate cut was on the way. Well, when you're formulating your opinion about what the currencies are going to do, the most important thing, of course, is interest rates. And so we want to know the interest rate differentials between all the different currencies. At one time, not that long ago, we had the British pound at 5.25% while the Japanese yen was at 0.5%, and that's what led to the currency carry trades that everybody was making a lot of money on. So we're putting all this information together, and then we're going to compare where are we right now in the economic cycle. So our economic cycle, again, for a review here, we have the expansion where the economy rises. Then we get to a point where we peak out. Everybody that wants to buy a car has bought a car. Everybody that wants to buy a house has bought a house. Then we begin to have a contraction where our economic activity begins to decline. And eventually we get to the point called the trough where the economy bottoms. So our economic cycle pretty much looks like what we see here. We have, again, what happens with monetary indicators during this time, what happens with economic indicators, and most important, what happens with the sentiment. Because, again, in recessions, people are very, very gloomy. And, of course, at the top, everybody's euphoric. So it's important to know where we are in the economic cycle.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.